What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's the new year. It is time for the FAANG Stock Recap Show, where every Friday we recap all the news of the week and the technicals for all the major FAANG stocks. Let's kick things off like we always do with Facebook. Started the week at $344. This one slipped down kind of nicely, down to about $336 per share. We'll talk about what that means from a technical perspective here in a moment. Facebook tried to stem its leaks and pit politicians against one another like they needed any help doing that over in Washington. This relates to the stories several weeks ago. It seemed like a coordinated effort. There was a, quote, whistleblower that testified on Congress. There was a series of stories that appeared across a number of different news outlets and newspapers. It was all pretty well coordinated and well choreographed. All in all, it didn't really do a whole lot to Facebook. Now, what I noticed, what was interesting, is that Facebook's board of directors include Mark Andreessen and Peter Thiel, who I believe is an outspoken conservative. So everybody that thinks Facebook is completely to one side, well, they do have Peter Thiel on the board, and both of them pushed Mark Zuckerberg to really push back against this and not apologize. And that's the stance that Facebook took in this situation. And for the most part, it worked pretty well, honestly. I don't think the story really did a whole lot to change anybody's perception of Facebook. Meta platforms surge on signs of strong Oculus holiday demand. This was interesting. So the Oculus app is already a top 10 app here in the United States, but they noticed after Christmas that it surged to number 1 and is now holding a top 5 spot, basically showing you that the Oculus probably sold incredibly well during the holidays. I think with all the news behind virtual reality, certainly probably spurred some sales. It also makes a very interesting gift because look, most people or everybody already has a cell phone, everybody has a computer, and also it's very difficult. I was trying to buy someone a PlayStation 5 and those things are still impossible to get below retail unless you want to pay like aftermarket prices for those things. So even a year later, it's still difficult to get the Xbox, still difficult to get a PlayStation, at least at list price. If you want to pay $102 more than what they actually list at, then sure, you can buy them. But the Oculus kind of falls into that where you can still go pick this up at a store or pick it up on oculus.com or wherever they decide to sell these things. It makes an interesting gift and it shows you that Meta probably has some runway in terms of sales when it comes to the Oculus. Apple hires, this relates to Apple and Facebook, but Apple hired Meta Platforms AR, which is augmented reality communication head. This is not necessarily anybody sitting down there that's typing code, but this is a communication head for the release of Apple's upcoming headset, which has long been rumored and is likely, at least according to rumors, headed in 2022 that we'll see some kind of headset just like the Oculus, but this time from Apple. And these two companies have been kind of trading engineers. And when we get to Apple here in a second, we'll have a news story about how Apple is trying to retain these engineers and not have them go over to Facebook to work on their projects. Speaking of Apple, started the week at 177.97, ended the week at 177.66. So obviously from a technical perspective, we're just kind of in a flattening stage when it comes to Apple. Now, Apple tops China smartphone sellers for the second straight month. I thought this was pretty surprising considering in China you have Huawei, you have Samsung, you have this other company called Vivo, you have a number of handset makers there in China, but Apple over the last 2 months has been beating them all to the tune of a 23.6% market share in China. The next closest competitor is at 17.8%. So it's just showing you that Apple, while not necessarily the cheapest device, and certainly if you've owned an Apple device for any length of time, probably not the best. It's not a perfect device, but at least in China, and certainly probably here in the United States, the data probably shows that Apple has a dominant position in that. And considering that is its number one revenue driver, that probably will be good for shareholders when we talk about earnings. We'll also give you the earnings dates, or at least the tentative ones, when we go over this from a technical perspective here in a moment. Apple is giving stock bonuses worth up to $180,000 to prevent defection. This is what we go back to when we talked about Meta how they're building up their metaverse, their Oculus platform. They have to have a lot of developers. They've been poaching some of them from Apple, and Apple's kind of been poaching them from Facebook. And one of the ways that Apple is looking to retain these people is giving engineers bonuses in terms of stock options between 80 and 120,000 and upwards of 180,000. Most received amounts of 80, 100, and $120,000. Now, I know in a vacuum, this is a lot of money, but keep in mind where these people live. Okay, I live like an hour and a half from here. I'm going to be honest with you. $120,000 is absolutely a lot of money. I don't want to minimize that, but where these people live, $120,000 goes way, way less than if you are virtually in any other part of the country other than maybe the heart of Manhattan or the heart of New York City. I mean, we're talking about one of the most expensive places to live. Just to park your car is likely as expensive as what some people pay in rent. And so while these are generous bonuses from a surface level, I tell you what, it's really expensive where these people live. And look, I actually think this is a good use of cash that these companies, if they think these engineers have special talents and they don't want them to go work for Facebook, they don't want them to go work for Amazon or any other company or do their own startup. Well, I love this use of the stock and cash over at this company. This is probably related more to the stock of the company. Use the stock this way. I actually applaud this since the government's not allowing these companies to do any meaningful acquisitions inside their kind of expertise, their core competency. Well, I love that. Go ahead and reward your key employees and retain them and hopefully keep them on board for a long period of time. Moving on to Amazon, start of the week at 3,285. We are just locked in a tight range with Amazon. When we talk about this from a technical perspective, I know we've been talking about it for like a year on the show. We are locked in this technical range. It is a good buying opportunity, and we'll talk about why here. Now, a lot of analysts are picking up on this, and I just picked up Evercore here, but you could have picked up probably a half dozen to maybe even a dozen analysts are piling into Amazon primarily because this last year was kind of an investment year for Amazon, okay? They ran up against really tough comps into 2020. Everybody was shut down. Everybody was staying at home. Amazon obviously had a huge boost in sales from grocery to regular items. A lot of people that never had experienced Amazon started to experience ordering on Amazon for the very first time. That is because they couldn't go out, or maybe they didn't want to go out in public based on the health situation that we had going on. So Amazon had a lot of great sales in 2020. The stock performed very nicely. Well, in 2021, the stock literally didn't go anywhere. I mean, it traded in a $400 or $500 range, which is incredible for a stock that's over $3,300 per share. And so a lot of people are winding up behind this one and saying, hey, that they're likely have an outperformance next year. I see a lot of price targets for Amazon in the upcoming year in that 4,000. This in terms of Evercore at 4,300, that would imply about a 27% upside. I think you could under the right circumstances. We'll talk about Amazon's first earnings date, which is the first week of February. If that goes well, I think that could be the catalyst that could boost Amazon out above its technical range, and we could have fundamentals and technicals line up with Amazon. Okay, look, with all these stocks, I'm kind of tooting my own horn. Amazon is my number one position from a dollar perspective. So obviously I'm kind of cheerleading and getting my pom-poms on right now. But look, the reality is from a technical perspective and a fundamental perspective, things could really line up well for Amazon next year, and that could make it a strong performer. And obviously analysts are lining up and agreeing with me to a certain degree. Moving on to NVIDIA, started the week at 301, ended the week at $294 per share. Not a lot of news out of NVIDIA. Moving on to Google, started the week at $2,961 per share. We always look at the GOOGL, no discrimination discrimination to the GOOG shares. It's just what we've picked here on the show, and these are the shares that I happen to own. You can apply the same technical analysis to either one of these shares. I think there's a small delta between them, but if you've noticed that maybe my prices might not match up with yours, just check the ticker symbol. I'm doing the GOOGL shares. End of the week at $2,897 on Google. Now, House Speaker Nancy Pelosi buys millions of dollars in call options in Google, Disney. This also included Salesforce.com, Micron, Roblox, which I thought was interesting that she threw this in there. This obviously is led by her husband, who runs a financial leasing services, like a big venture capitalist. Now, we're talking about hundreds, like big trades, okay? And what I noticed was her trade in Google and Salesforce were the largest. She bought call options in these that were upwards of $1 million. So hello. So she's lining up behind this. I look, from a technical perspective, it might make a little bit of sense when we look at Google here. I don't necessarily think there's going to be any I don't think there's any bills going to be passed. Look, Congress is on recess, I think, for at least another week or two. And we also know that we've got quite a bit of gridlock in Washington. But this also relates to a little bit. I know the headlines are always like, the Democrats are after the tech companies. The Republicans are after tech companies. Well, this just supports that they're not. That's a lot of lip service. And look, we're used to that probably across all I know this is a worldwide show. We get viewers from around the world, and I appreciate every single one of you. And we're talking about United States politics here, but it probably relates to almost across the world. Look, politicians say a ton of stuff, including Nancy Pelosi and the members of her party. They say a lot of stuff about big tech, but they have literally not done anything meaningful for these companies. And this is an example of how I don't think they'll do anything meaningful. She's got $1 million worth of stock options in Google. I don't know when they'll expire or when these go into effect, or how the trade actually works. But look, she's got a huge bet on Google. Like, is she really going to do anything negative to that company? Probably not. And so those are just some things you want to think about when you see these negative headlines on Facebook, when you see them on Google, when you see them on Amazon. Well, this is just all lip service for the most part. And look, we're not picking on one party or another. This is for both parties. Okay. Now, moving on to Microsoft, started the week at $337 per share. Not at all surprising. Most of these stocks, outside of maybe Meta, were for the most part flat this week. Okay. Didn't see a lot of trading. The big guys, I had a comment on my channel last week. I talked about how I thought this week was going to be kind of a slower week with trading. And some people said, hey, you might have tax loss harvest selling this week. Well, those big guys are out. Okay. If you were really doing tax losses, you were out 2 or 3 weeks ago when the liquidity in the market and your CPA was telling you to do it. This last week, yeah, you might have some retail investors kind of piling out, maybe doing some tax loss stuff, but that's a small percentage of the money that is flowing through the market. The big guys were out 2 or 3 weeks ago, well before the holiday. And so it doesn't surprise me that we basically saw kind of a flattish week on the stock market. We certainly saw that with Microsoft. Not a ton of news out of Microsoft this week. Moving on to Tesla, we had quite a bit of news on Tesla. That's why I love talking about Tesla. And if you like EVs, and you like the format of this show, I do have news for you. Starting tomorrow, I'm going to start an EV stock show where it's going to be a similar format to this show, where we talk about kind of the news of the week. Because look, to make this show entertaining, you have to have stocks that constantly make news. And Tesla and GM and Ford and Rivian and Lucid and all these companies are in a huge investment mode. We'll talk about the battery story that came across this week. I mean, these companies are spending hundreds of billions of dollars over the next 4 or 5 years to transition their fleet from making combustion engines into electric engines. And it's going to be a huge, just news constantly. And so we're going to monitor it on a Saturday show. I've put up a vote, and Saturday was the most popular date. So starting tomorrow, we'll have the EV stock show, and that show will air every week on Saturday, as long as I don't have things come up, which does happen from time to time. Now, back on target here. Tesla started the week at $1,088 per share, ended the week at $1,056. So down just slightly. We'll talk about what that means from a technical level here in a second with Tesla. Now, Tesla asks its employees to protest the California proposed rooftop solar changes. We talked about this either last week or the week before. Out here in California, they're proposing changes, which I really don't like, okay? Now, it doesn't necessarily apply to me. I've already put solar on my roof. It looks like, at least as written, I would get grandfathered in for 10 to 15 years or so, but it changes how if you produce excess solar on your roof and then you feed that back into the grid, you get paid a certain amount from the utility companies. Now, the utility companies don't want to do that. They want to pay you a much lower rate. Now, I'm not on PG&E, which is the vast majority of Californians. I'm on a different electricity. I already pay it back in at a wholesale rate. That's why I just bought a Tesla. Instead of paying it back in at a wholesale rate and getting paid very little money, I might as well stick it into my car. When you're looking at the price of gas, it's much more profitable to stick that energy into my car. Eventually, I'll get the Powerwall batteries and I'll put that on the side of my house and I'll feed that. Now, what the proposals are doing will actually very negatively impact the solar business out here in California, because not only will I not get a very good rate when I produce excess energy, but I'll have to pay up like a solar tax, like $40 or $50 a month, that's why I put solar on my roof, was to avoid paying fees, avoid paying. Now, China sticks to this is interesting. China sticks to the plan. They scrap an electric vehicle subsidy starting in 2023. Now, China had a vehicle subsidy. It started at $3,500 per vehicle. We have similar subsidies, which I'll talk about here in the United States as well. That went down 20% to $2,830. Now, starting January 1st, 2022, which is tomorrow, China will reduce the subsidy by another 30%. And in 2023, it looks like all electric vehicle subsidies will go by the weight size. Now, that's a pretty significant thing, because in China, the average electric vehicle actually costs under $42,000. So, a $2,800, $3,000 subsidy is actually over 10% of the purchase price on that car. Now, here in the United States, the electric vehicle average cost is closer to $5,500. And we know inside the Build Back Better program, which is currently stalled and doesn't look like it's going to be passed maybe in its current form, but there were tax subsidies in there for union-based. So this would be your Fords, this would be your GMs. If you were to buy an EV from them, you would be eligible for a $12,500 tax credit. Now, think about that though, a $12,500 tax credit. You have to be mega wealthy. Okay. You've got to be in probably the upper tier of, six-figure, depending on what state you're in. Out here in California, probably close to a seven-figure earner to really take advantage of $12,500 tax credit, but certainly something that wealthy taxpayers would probably have taken advantage of. And then I think non-union, so that would be Tesla. I think some other automakers out here are non-union. I think you're eligible for a $7,500 tax credit, which again, off a vehicle that costs $50,000, $60,000, $70,000, certainly would be a worthy thing to go after. Now, obviously, Build Back Better is on the sidelines right now, but it's something to keep in focus as we move into this next year. It is an election year for a large percentage of Congress. I'll be interested to see if they have any political will to push forward something over the finish line and to see if these EV credits happen to go over that. Now, Tesla is recalling over 475,000 cars. That's a lot of cars, okay? Over issues that could increase the risk of a crash. Okay, this includes Model 3s between the years of 2017 and 2020, and Model S's between 2014 and 2021. So obviously, as we know with Tesla, one of their advantages is they only do very subtle changes to their cars. Okay, a 7-year-old Model S could drive next to a brand new one, and you might not be able to tell the difference. Okay, yes, there are some differences in the car, but there are only subtle differences, and that obviously helps Tesla from a profitability perspective. But what it does hurt them is if there is a recall, like they're recalling like a massive amount of cars. Okay, 475,000 cars over a 7-8 year period. That's a lot of cars. Okay, because as we know, this year Tesla will be just south of 1 million deliveries, and that's way up over the previous year. So Tesla recalling lots of cars. Now, Tesla's Elon Musk unloads another $1 billion on stocks as he exercises his last batch of options. Obviously, I told you on last week's show, I thought he was at the end. Maybe this was even 2 years. Well, I was wrong. This dude unloaded another $1 billion in stock this week, but now I think we're pretty comfortable. It's the end of a tax year. Also, when you digest these, he actually is a net buy. He's actually increasing his position in Tesla. So while he sold $1 billion, his stock options was actually in excess of that. So he actually retains even more ownership of Tesla. Incredible how that works. How you can sell $1 billion worth of stock, but still actually increase your ownership in the company. So he still has a large position. This is not, a situation where Elon Musk is unloading this and kind of reducing his share in Tesla. He's actually maintaining a large ownership position. And in fact, if he was kind of cashing out of the company, I think the stock would be reacting far more negatively than it has been. Now, Tesla is in a clear position of strength. This is according to Wedbush, and they are upping their price target to $1,400. Now, the only reason why I put this in here is this mirrors a lot of what we saw with Amazon. We saw a lot of people pile in terms of, and when I say people, I'm talking about analysts in the Wall Street community kind of piled in behind Amazon because the stock really didn't do anything for a whole year. A lot of people are piling into that. Now, I saw the same rationale between, I would say, about a half dozen analysts this week. They were piling into Tesla saying that they're in a clear position of strength. Look, GM, no position of strength. Ford's not in a position of strength. I mean, it's laughable. We'll talk about this a lot on our EV stock show. Well, how Rivian, kind of laughable how many cars that they are capable of delivering, not this year, but even next year and the following year. Same thing when you look at a Lucid. I mean, we're talking about niche, very niche amount of deliveries, like almost nothing. It's like a speck of dust on the ground when you look at how many cars they're going to deliver. So that means Tesla absolutely is like Michael Phelps, man. They are draped with gold medals and they are going to hit next year probably, a few laps ahead of competitors, and that should drive the stock higher, at least according to analysts, looking at about $1,400 price target over at Tesla. Now, electric vehicle roundup. Tesla, Rivian, and other traditional automakers are planning 13 U.S. battery plants by 2025. We'll see if they're able to pull this off. Obviously, Tesla has one in the works, I think, in Austin, but we are also looking at pretty much every automobile manufacturer. This is the hang-up. Okay, because we know that GM and Ford and VW and all these, even when you look at Rivian and Lucid, kind of the startups, look, they can stamp steel. They can order parts from Mexico and they can get them here. They can order the parts to these cars and put them together. It's really the batteries that are the hardest part, okay? Because you have so many raw materials that get put into them, and not many of those raw materials actually come here from the United States. And so it's that part of the business that is the tricky one. And so we are going to monitor this super closely, not just here on this show, but certainly our EV stock show that debuts tomorrow on Saturday. This is what we're going to be paying attention to a lot. Okay. I don't necessarily think there's going to be a lot of gold medal winners when it comes to actually making the cars, but all the other businesses that line up behind EVs, I think there's a huge opportunity there, and certainly in battery technology, battery recycling, battery, innovation. Those are going to be what's going to drive a lot of profits, I think, in the EV industry. Obviously, Tesla has an absolute leading position in this, and we'll see if any other company can kind of fall behind that. Now, moving on to the technical segment of the show, you'll notice we do have new stock charts here on the show. I had to switch to TradingView. Just my other charts just weren't working with this new operating system and new chip technology that Apple is running on their laptops. I just could not get the last charts to move. So I apologize if you enjoyed those. We have to force to move to TradingView. Now, kick things off, we do with Facebook. What I wanted to do is I wanted to take a broad view. So I'm zoomed out here on Facebook, and it's kind of a 2-year chart almost, or about a year and a half. And I wanted to show you that, yes, we had this big downdraft in March, okay? And we've had periods where we've gone over this trend line. For the vast majority of the time, though, we are kind of hugging this trend line, and that's about where the stock is today. We're a little bit above it at about $340 per share. But look, so if Facebook were to pull back, it wouldn't concern me at all. If we got down in the next week or two, down to about 315 on this one, wouldn't concern me at all. In fact, we could get all the way back down here to about $300 per share. Wouldn't surprise me, wouldn't shock me. In fact, would likely create a buying opportunity. Now, we're on the eve kind of on the eve of earnings with all these stocks. Facebook is going to report on February 3rd. Again, these dates tend to be tentative, especially when we're talking about, maybe Congress coming back and opening up investigation or waltzing these people up. That can delay these. It can move these dates around, among other things. Certainly the health situation could move these dates around a little bit, but tentatively we're looking for earnings with Meta on February 3rd. But right now with Facebook, we're really just in a tight range between $300 and about $337 per share. This stock is towards the top end of the range. We're looking for a break above $350 on this one. You get above about $350 on this one, and look, it could run. But look, I would actually expect it, if it got to about $350, to get rejected. We're looking for it to hold this trend line. Not that this trend line right here that I have, I'm kind of wiggling it on the screen right now. Not that that trend line is perfectly drawn in or it's the absolute kind of line in the sand, but we're looking for that level to hold. If it were to break and we come down to about $300 per share on Facebook, I think that would actually create a buying opportunity in shares of Facebook. Moving on to Apple, similar type of story, although we have not broken down on Apple. We're in fact at the top of a range. The stock has topped out at about $180, $181 per share. If you're trading options, if you're day trading, if you're swing trading, you want to open up your chart and not just take the price I'm shouting out, okay? There are very specific levels here. I tend to shout out more of a round number. We're topping out at about $180, $181 per share. In fact, we've hit our head on this one several times, but we're holding this level, okay? And look, we're looking for a break above that sometime in the new year. This stock is in a very, very steep, like really shorter term, we're in this really steep upward trend on this one. I don't think that's definitely not sustainable. I would look for this one to flatten out at some point, but for right now, it is not. And if you get a break above 180 on Apple, look, this thing could run. I mean, it could go to 200, it could go to 225, go to 250. I mean, it could go as high as infinity, I guess, theoretically. But we look for this one easily, probably to get to 190, maybe even $200 per share. If we get rejected here at 180, which I think has a pretty high probability of doing, we're looking for buying opportunities, I think south of about 165 on this one. You start getting under 165, it starts opening the door for buying opportunities. I think your first clear cut one is back down here at about 158, which were the previous highs on the stock. And once we broke above 158, we kind of got really high up in here to the 170s. So I'd look for this one to pull back, hopefully back into that 158 level. That'd be the first area where I'd want to pick up shares of Apple. Moving on to Amazon, like we've talked about, the stock has been in a very, very tight range, okay, between about 3,100 on this one and about 3,500. I mean, depending on where you draw these lines, we're still talking about a very, very tight range. I mean, this thing looks like an ice cream sandwich. You've got a little bit below and you've got a little bit of candles above those ranges, but not much. Okay, now in the shorter term, we're still like in a shorter term uptrend on this one, but it looks like we're right here, right at about where the stock is right now, $3,335 per share. If you open up on Monday or Tuesday, whenever the market tends to open next week, I think Monday might actually be a holiday. So if you open up lower than this, it does create buying opportunity. South of 3,300, I think, is a buying opportunity. Look, anywhere inside this box potentially is a buying opportunity. We're still looking for a break above 35.20 on this one. And then more specifically on the really upside, you got to get above these all-time highs, and that's 37.60. You get above 37.60 on, it shows you that, look, we're going to make an Apple move, we're going to make an NVIDIA move, we're going to make a Microsoft move, a Tesla move. Pretty much all these stocks have made the move already. They've gone sideways and they've broken above the highs. The only stock that has not done that actually is Amazon. And the catalyst for Amazon could potentially be earnings. We've got earnings on February 4th. There's long been rumored that this stock should do a stock split. I think retail investors certainly would appreciate it. I'm actually thinking about moving my stock account, which my IRA account currently is with E-Trade. I'm actually thinking about moving it to Schwab or one of these other ones that have, more specifically Schwab. There wouldn't be any other choice because I really like their customer service. It's a company I don't get paid by Schwab to say this. And look, they can contact me if they want to support the show. They want to sponsor the show. I wouldn't accept almost any sponsorship, but if Charles Schwab wants to sponsor the show, we'd actually absolutely take them in. February 4th is earnings with Amazon. That could be a catalyst if they want to do a stock split. But that would absolutely soar these shares. Okay, it would likely take us up above this 37.50 range and get the momentum behind this one. But if we don't do this, look, maybe not. And we could see a breakdown in Amazon. Anything south of about 3,300 on that one, I think does create a buying opportunity with Amazon. Now we're just staircasing up with NVIDIA. Okay, NVIDIA sideways consolidated up, sideways consolidated up. Now we're doing the same thing. We're sideways consolidating up here in a range between about 280 on this one up to about 340. Okay, look, we went sideways here, up, sideways here, up, sideways here. Is the next move up? Potentially, yes. And you would get it, I think, pretty soon here because we've got this kind of uptrend going with NVIDIA. So we've started, this uptrend, and I would expect as we come here in the next couple of weeks, we're trading down here at 280. That's a spot where you can acquire shares of NVIDIA if you wanted to. Now, NVIDIA, unlike most of these stocks are reporting either the tail end of January or the first week of February. NVIDIA goes into about the third week of February when we're reporting on February 18th. That will be earnings with NVIDIA. Moving on to Google. This one, again, we talked about how Nancy Pelosi and her husband are kind of piling in on this one. I thought that was kind of interesting because we are kind of going sideways. I mean, we are going sideways with Google. For the last month or two, we've been going sideways between about 2,800 and 3,000 on this one. I'll straighten out that line. That's the box you're in, and we're smack dab in the middle of this one. So on the bullish side, if you're like buying options on this one, you need a break above this 3,000 level. Okay. Now buying opportunity anywhere down here at 2,800. I think that's a good level. I wouldn't necessarily pile into that because if you do break 2,800, there are some levels down here, 2,700, 2,750. There's some levels where if the market really gets negative, I could see this one come back. You've got a level down here, which what I would call kind of your critical level onto the downside with Google. That's down here at about 20, to round the number off, about 2,700. You get down here, this would be a really, really good spot. If we can get some negative sentiment in the news, negative sentiment in maybe Google, which I don't necessarily think will happen, but if you happen to get that, you've got some buying opportunity south of about 2,770 on this one, which would be really, really good spot, in my opinion, to pick up Google. Moving on to Microsoft, making a similar move to NVIDIA, where we kind of go sideways up, sideways up, sideways up. It's what I wanted to do with, just like we did with Facebook, I wanted to just take it back, get up in a helicopter and go up about, 10,000, 15,000 feet and just notice that we are on just this steady uptrend with Microsoft. So as this one goes sideways, no big deal. Okay, we're actually towards the top of the range. This is looking like Apple, where we're kind of at the top of our sideways consolidation range. We're sitting at about 336 on this one. The top is about, we'll call it about 345 or so. You get back up there and you get above 345. I think you really need to get above this candle here, which is about 350. Get above that one and look, 360, 370, 380. Gosh knows, maybe even $400 is in play with Microsoft. I would actually expect it to stall out. And as we come back down here, you have buying opportunities south of about 325. You get south of 325 on Microsoft. I think you can pick up shares on that one. Now, the last stock that we always look at is Tesla. Now, this one, I wanted to zoom back out again. I want to show you that we are in a very long-term uptrend with Tesla. Now, like Tesla tends to like overdo its uptrends, okay? A lot of retail pile into this one, a lot of euphoria and a lot of hype because Tesla has a massive high growth rate. And I think a lot of investors are identifying that they have a high TAM or total addressable market. So unlike a lot of the other companies that are rather mature, okay? Microsoft's business is really mature. They're still growing at a tremendous rate, but when it compares to Tesla, it's not, Tesla's growing at 90, 100%, whereas companies like Google, I think the second highest grower is like in that 40% range. And certainly when you look at like a Apple or an Amazon, they're growing in that like high teens to 20%. So Tesla has the highest growth rate. And so you tend to see these kind of overdue to the upside. So this uptrend is still intact, but What I noticed from a shorter term perspective, we made a high up here, a lower set of highs about $100 lower. So we made highs at 1,200, lower set of highs about 1,150, lower set of highs now down here at 1,100. So I'm watching Tesla pretty close next week, and to see if this area holds. If it doesn't hold, we could get south of $1,000 on this one. And look, if you get south of $1,000 on Tesla, I still think it's a buying opportunity in the shorter term. Now, in terms of earnings, we're looking February 3rd is just going to be a massive day. If all these dates hold, February 3rd is a massive day here on the show. I think half of these companies, or more than half of them, are going to report on that day. So you might want to mark that day on your calendar. But what tends to happen is these companies make the move before that. So I don't want you to think that we can just wait all the way till February 3rd. These stocks, I think, are going to make a move before that, okay? One way or another. Some of it could be macro driven. Fed news, interest rate news could drive the stock market down, could bring all these stocks down there with them. But if that kind of gets pushed to the side, investors not really worried about that, well, I think you're going to have investors pile in anticipating earnings from all these companies, and it will drive these stocks one way or another. The next 30 days, absolutely critical with these stocks, and we'll bring you every step of the way here on the FAANG Stock Recap Show. Happy New Year, everybody. Thanks for supporting the channel all year. We're going to be back in 2022 and back even better than we were last year. Thanks again for all your support. I hope you all have a wonderful and safe holiday. Enjoy yourselves. We'll see you next year.